Podcast Network Asia.
You are listening to First Metro Securities Philippine Stock Market Weekly podcast, where we feature timely and relevant discussions on the Philippine stock market and the economy in the hope of providing you investing and trading guidance. Here's your host.
How's it going, investors? Hi, I'm Anjz, an equity research associate from FirstMetroSecurities, where I cover the consumer sector. In this episode of Market Bites, let me share with you our latest company update on Robinsons Retail Holdings Inc., or RRHI, titled Retail Weakness Likely in the Price. RRHI's 2Q earnings rose 3.1% year-on-year to 47.8 billion pesos, bringing first-half earnings to 93.7 billion pesos, higher by 3% year-on-year, with reported SSSG flattish at 0.7%. By segment, food at 1.3%, drugstore at 3.2%, and department store at 2.4%, delivered positive SSSG and were revenue outperformers, mitigating the drag from negative SSSGs for DIY at 4.8% and specialty at 5.2% stores. Improved category mix and vendor support resulted in a 40 bp expansion in gross margins, which offset 4.4% year-on-year OPEX growth during the period. EBIT grew 5.5% year-on-year in 1H24, on track with our estimates. On some key takeaways, first, 2Q SSSG was underwhelming, especially given that the period benefited from the timing impact of last year's Holy Week in April, as well as the 3-day payday weekend in June. Second, core metrics are in line. We take comfort that RRHI is on track to meet our FY24F core earnings forecasts, with net sales YTD in line based on seasonality. Third, higher gross margins offset higher OPEX, thanks to improved category mix and higher supplier support. And fourth, management guidance is mixed. Lower SSSG and net store additions, balanced by upgrade and gross margin expansion outlook. For critical data points to watch, first on SSSG, management lowered guidance this year to 2.4% from 3.5% previously. Second, store rollout was also lowered to 90 to 100 stores from 100 to 120. Third, gross margins was lifted to 20 to 40 bips increase from 10 to 20 bips. And lastly, cash conversion cycle improved to 20.3 days in 1H24 from 1H23's 25.3 days. Pre-COVID, RRHI's CCC days was in the negative territory. RTP of 43 pesos implies 12.1 times PE for FY24F and 10.5 times PE on FY25F core EPS, and assumes valuations to stay below -1 standard deviation of mean at 17 times. This is based on a DCF 11.9% WACC and 3% terminal growth of RRHI's core retailing operations. To get more bullish, we prefer to see robust growth in sales offsetting cost pressures, RRHI reducing its debt burden, ROE expansion to justify a multiple re-rating, and visible gains from the partnership with BPI. Meanwhile, key risks to our call are current retailing backdrop deteriorates on slower than expected recovery of demand, tighter competition to warrant faster store rollouts and price wars, affecting the CapEx budget and margins, and absence or negligible synergies from the partnership with BPI. That's a buy call for RRHI at 37.50 pesos target price. And that's it for this episode of Market Bites. Hope this has been helpful.
Thanks for listening to First Metro Securities Philippine Stock Market Weekly podcast. Don't forget to follow us to get first dibs on our new episodes. For more up-to-date market news and info, exclusive content, and the opportunity to connect with your fellow Filipino investors and traders, join facebook.com/groups/FirstMetroSec and be part of the FirstMetroSec family.
FirstMetroSec is providing this podcast as a general market commentary. Reference to any specific security, product, or entity do not constitute as an offer or a solicitation of an offer to buy or sell any financial instruments or to participate in any particular trading strategy. The statements, comments, views, or opinions expressed by the hosts are subject to change without notice, and FirstMetroSec is under no obligation to update, amend, change, or correct any of the statements, comments, views, or opinions expressed. The statements, comments, views, and opinions expressed by the guests are their own and do not necessarily reflect the view of FirstMetroSec. FirstMetroSec disclaims any liability arising from reliance on or reference to any information obtained in this podcast.
The views and opinions expressed by the podcast creators, hosts, and guests do not necessarily reflect the official policy and position of Podcast Network Asia, the hosts of the program, or other programs of the network. Any content provided by the people on the podcast are of their own opinion and are not intended to malign any religion, ethnic group, club, organization, company, individual, or anyone or anything.